All right, folks, welcome back. This is our ICT commentary for Monday, the 22nd of November, week of Thanksgiving. Good grief. When you really think about it, you see how fast this year has gone by? Like, it's quick. The folks in the 2021 group are probably thinking, man, this thing's taking forever for me. What's he talking about? But I guess it's just a matter of perspective. But for me, as I'm getting closer to 50 years old, I'm just astonished to see how fast time zips by. When you're younger, it seems like it drags on, but anyway, uh, we have the daily chart here on the dollar index. We had another run higher. So the thing I was trying to draw your attention to for these highs here in relationship to the lows on euro dollar, I was expecting maybe some kind of a softer opening on Sunday. It wasn't having any parts of that, so we opened and just sent it higher. So again, I have not been trying to call a top, and it's important that you remember that we don't try to do that here. And also, this week is also typically a very low volume week, and because of that, the moves can be exaggerated. Now, I guess with that kind of expectancy in price action, it could lull you into thinking, wow, thinner markets can move a lot, but don't let that entice you to the degree where you think, okay, thinner markets means big volatility, but that big volatility may be adverse to your position. And it can be quick and sudden and really move against you quicker than you probably would like to see. Not everybody doesn't want to see a losing trade, obviously, but when a market can gap through and just really run through a price level that you were hoping that would hold, or maybe even has a stop loss that you're using, that can cause slippage, especially in like the futures market. Forex tends to not have that much slippage, but if you're a futures trader like index trading and commodity trading and maybe currency futures, you can experience slippage there. Slippage is the term used for when you're trying to get out of the marketplace and the difference between where you hope to get out and where the market actually fills you. And you can have sometimes positive slippage, which is really fun. You're trying to get out when the market's moving in your favor. That's why I have the exit strategies that I have. It's been framed on futures markets. So the idea is, as the market's moving in my favor, even though I think the target's maybe slightly beyond where I'm trying to get out at, the mindset is I want to see it moving in that direction. So that way, if I do get slippage, it would hopefully be in a positive slippage, not negative, where it takes away the price I'm trying to get out at. In other words, the best case scenario is that you get out at a better price than you're trying to get with your exits. But in thin markets, in low volume markets like we have in this week here, that tends to create markets that have these real sudden runs, and you may or may not expect them in price action. But if you're caught off side and you're obviously on the wrong direction, it can be very painful and shell shock you. So it creates not the best trading conditions, in my opinion, for a developing student. Can I navigate in something like this? Yes. But to do so and to illustrate that is defeating the very thing I tell you why I stay out of the marketplace. So I'm teaching and preaching by example. So anyway, with that said, dollar index higher, any S&T that was potentially warning. Now again, it's not a timing tool, it's a confirmation tool. So dollar was not showing a higher high here, and that's what I was kind of drawing your attention to on the weekend commentary, while the euro made a lower low. So the Sunday opening, which is always a mystery, you have no idea what's going to happen. We get the strong delivery after the opening on the new week. So couple that with the week profile that I expected because of the holiday. It's a shortened week. We're looking to, if you're going to be engaging or practicing or studying, the truest form of market structure is going to be up to Wednesday, 7 o'clock in the morning. After that, things can get squirrely. Now, I'm not suggesting that it can't create a really beautiful technical setup that forms after Wednesday, 7 a.m. I'm just telling you that from personal experience, which I have a lot of it studying this stuff, the likelihood is that it can get uglier and choppy or just not as symmetrical. So the price action is not clean, it's not well defined, where it's easy to see what it's reaching for, where it can come back to rebalance or take stops before running. Those signatures don't exist that frequently and consistently during this week. That's been my observations over the last almost 30 years. All right, so hourly chart here, and just a straight run right from the beginning of the new week. Nice delivery here. Nothing really to speak of that would kind of like frame that for me. So yeah, it's a run, but I don't have anything that would have been used to participate with that. Okay, and again, you can see here, small little decline in here. I don't have any interest with this. I would have rather seen it drop down below here. So if, okay, let's just say if, and this is a huge if it would have dropped down in here and then rallied and created some kind of fair value gap that could drop back down into or an order block, at that time I'd be interested to go long. And notice it didn't even do that, and it didn't create any order block either. So the only thing it did here is sweep below these relative equal lows. And to me, I just didn't think that there was anything that would be noteworthy here for the dollar index. So I wasn't even interested in watching it today. But I was surprised later on in the afternoon that it had really vaulted in here. Notice I'm keeping it very bland. Okay, I'm trying not to entice. I don't want anybody in here trying to force an idea or a setup this week. I want you to be more focused on relaxing and letting this week pan out without you actually engaging. That's something you should be studying. Okay, what does it feel like for you to do that? And what happens if a move does occur this week and you didn't participate? Or maybe you saw it forming, but you don't participate. How does that influence you subconsciously, from a psychological standpoint, an emotional standpoint? What do you feel when that happens? If it happens, it may not happen, but I want you to log that in your journal, because these are huge milestones for development. Because if you can get past that fear of missing out on a move, that is an enormous stride for development as a trader. That is the number one reason why people lose initially. When they first start learning how to trade, they think they know how to do it, and they're in a rush. They feel like this trading day that they just woke up into, they rolled out of bed, and now because they're awake and they have an account with money in it, and they have an internet connection, they are going to trade come hell or high water. And that fear of missing out on some kind of a move is linked to a lack of understanding that sound setups, solid framework that is repeating phenomena is unknown to them. See, that's one of the benefits for you as a person of tutelage under me, is that once you become a charter member and you have all this content behind you, there's so many different ways for you to study to make these concepts uniquely yours. So that way your model is yours. And you operate just in that model. That list of parameters and rules that you look for to engage in. And if it doesn't meet that list of engagement rules, you don't do anything. So it provides a means of being disciplined, because you have to have this checklist of things you're looking for. And you're going to see moves that take off that don't have your model lining up with it. And that is also a huge mile marker in your development, because there's always setups that move around and gyrate in these marketplaces. I don't attribute every possible thing as a setup. I'm looking for things that make sense to me. And certain things just aren't going to be on my radar. And I'm not going to beat myself up over it. I'm not going to come in here and make excuses why my tools would have said this and said that. If they don't have anything that would have lined up for it, and I'm telling you, there's nothing that I would have used to line up with that move. And now here's the big takeaway. We're in a week where I have already, and historically, every single year, even when I was on YouTube, I said that I don't trade this week. The week of Thanksgiving, I am not active because I know that this week has hurt me in the past. I have lost lots of real money trading this particular week. FXCM took a lot of money from me this particular week, and that was the one that capped it for me. I said, that's it. I'm done. They didn't even respect my stop. It just kept on rolling. And they weren't having any parts of settling up with me. Now, later on, when they had to do a settlement with everyone that got screwed by them, I didn't get nowhere near as much as I should have. But they forced them to stop doing business in the United States. So that event that took place with me trading and my stop not getting respected and just losing money and having to literally close the position out manually while my stop was still on the screen, they were not respecting it. And it was just astonishing to see that this week that I was in, which is the very week we're in right now, that trade got smashed. And it solidified this rule. And prior to that, I was one that would say, okay, I know the market can thin out and not really be that liquid, but I felt that I was nimble enough that I would be smart and get in and then let these illiquid movements happen and get out right when it started to explode in my favor. And that event, trading through FXCM, removed that whole interest. I don't want to be, and I'm not suggesting that that would repeat now, because they obviously got smashed upside their head by the regulating bodies that obviously knew what they were doing. And they cheated customers, not just me, but they cheated most of FXCM's clientele in the US. And they closed their doors and no longer allowed to operate inside the States. Well, I don't want any of you to think that I'm going to break that rule and want to engage in this particular trading week. So that's why I don't want to give you that much commentary, except for what we've already been looking for, which is what we're looking at here on the euro dollar. This is that weekly imbalance and that specific price level that I've had here now for a couple weeks. It's drawing down to that. So again, I'm counseling you to go back to the commentary. The benefit of being in here is knowing what the higher time frame bias, therefore framing a daily bias. Not every single day in here, well, let's say from here to present. How many up days did you have? 1, 2, but it's all part of a retracement back to a bearish order block. It breaks down back into this bearish order block. We have 3 consecutive days. Then it smashes down, 1 up day here. Then it smashes down, indecisive day, 1 up day, and then 2 beautiful sell-off days. And what direction is it trading in? Lower. Would you fare well by abandoning the bearish long-term bias that I've been providing for you? It's better to stick with that bias, even though if you went in this day or this day or this day looking for setups, maybe you got tripped out and stopped. But if you keep going in hunting it and you're using good sound money management, maybe you took a loss or 2 in here on these days trying to get short. Let's play devil's advocate for a moment. But look at what you end up getting. You get this nice run here that you could be a participant in with less leverage because maybe you took a loss or 2. It recoups it. And you have an up day. Up day in a long-term higher time frame bearish bias sets up new selling opportunities. This is your signature here to saying, okay, that means that we have now crossed over to a bullish close on the daily. And the algorithm will look to roll over and change its state of delivery. I'm going to say that again. When higher time frame charts are in sell models, okay, or sell programs, this characteristic of hunting up close days, that sets the algorithm up for a day of selling or days of selling off, going lower. So notice that we had large ranges A small range, but it's up close. And then we have what? Large ranges and they're going down again. So that sequence that I learned from Larry Williams is small ranges begot large ranges. Large ranges, everybody wants to jump in at that time, but then it goes into small ranges. So we are in a series of large ranges again. It's drawing to where I took your attention to. It's not random. This has been here since I first introduced it in the commentary. Is it not drawing down to it? Yes. Do not try to fight the higher time frame commentary. I'm doing it for your benefit. It helps you keep your bearings in the marketplace and trying not to pick tops and bottoms and submit to this institutional order flow. You have to submit to that. That's also one of the things that the students here that struggle the most, the number one hallmark to their struggling is they go against what I say in the higher time frame commentary. When they go against that and they send email saying, I'm having trouble, I'm struggling with this, and I say, okay, show me what you're trying to do. Well, I tried to go long here on the euro dollar. Why? Why are you trying to buy the euro? The euro is going lower. Its higher time frame order flow is bearish. You're trying to be that fish that's swimming against the tide. This is the benefit of mentorship. This is the benefit of doing these commentaries, is for you to have the higher time frame lay of the land. Okay, you want to get in sync with that higher time frame tide, that directional bias that is better for you to be getting in sync with. And I'm not relying on trend lines. I'm not showing you moving averages or anything like that. I'm teaching you how to see it, decipher it from the price action itself. And it's naked. I'm only annotating the things that are going to be salient to where the market should draw to. Okay? So a lot of things that I'm saying here, you need to take to heart and start considering it when you're listening to when I do these commentaries. I'm trying to build your trust in these concepts every single day, every single week. And while I'm not perfect, it's not perfect. It's very consistent without having to be 100% perfect, which nothing's going to be 100% perfect. But if you find yourself going against these higher time frame commentaries, that's the first thing you need to change. You're not relying on me and you're not building a dependence on me. What you're doing is you're learning to trust the concepts with proof of theory. That's the whole benefit of me doing this. I don't need to do these commentaries. I could just say, this is the way it is, this is how you do it, and leave it up to you. And most of you would fail. Most of you wouldn't see what I'm showing you in the commentaries. You would get frustrated and think, well, I'm trying to do this, I'm trying to do that, and put too much emphasis on a 15-minute time frame, completely ignoring what the weekly and the daily chart is suggesting. Is that weekly range expanding higher or lower? That's the benefit of the mentorship. That's what I'm trying to teach you. What should you be focusing on? The weekly range expanding to the upside or downside? How do you know what's likely to occur? Well, what's the higher time frame bias? Well, that shaded area down here is what we're looking for. And I said, it ain't going to go in a straight shot. It's going to take some time, weeks to get into that. And here we are, we're drawing up on it now. So it's a matter of balancing a lot of expectations on your part, but also submission. You have to submit to a lot of things here and also keep that balanced as well. So that way you don't feel like you are codependent on my words. But in the beginning, you have to have some kind of experience to lean on. Like when you buy a book, you're leaning on the author's theory, hoping that he or she has done their due diligence to come up with the data that they're portraying in their book for you to even consider doing it or following along in their footsteps. Here, I'm doing it right in front of you. And I'm doing it daily. Okay? It's not like I'm just doing it one time a week and, okay, hopefully I get it right. I'm keeping your perspective daily on what it should be reaching for. And you have to keep yourself aligned with that. And by doing that, like that's 80% of this battle. Like you have to know where it's going. because the large players in this market, they're looking down there. They're not looking at all these little patterns that you're trying to focus on a 1 minute, 5 minute, 15-minute chart. As much as they are fun and highly precise when you're in sync with the marketplace, if you're trying to go into the marketplace for setups for their own sake on those lower time frames and ignoring these things I'm teaching you and showing you and basically handcuffing you to this higher time frame order flow, like I'm forcing you to keep this in mind, doesn't change the fact that we could see a reversal. It could go vertical from here, and it never touched that blue line or that blue shaded area where the imbalance is on the weekly chart. Those things could happen, but it's more likely and it's higher probability that it's going to continuously draw into that and could even go lower than that. But for right now, our focus is down here. Like that's that draw on liquidity, that's that magnet. Price is pulling down into it. Why? Because the algorithm wants to go down there for the sake of that imbalance. It knows it exists, so the buy side delivery that was offered and the sell side that was not offered in that range of that blue shaded area, it wants to rebalance that. Interbank traders see that as, well, that's what I'm holding for. When it gets down there, they'll trade accordingly. They've been short. They've been selling short since the spring of 2021 up here. They sold in here, they sold in here, and now we're getting to that leg where it's approaching the target, so it should expand with a lot of speed. We're seeing it here. The last 2 trading days for Eurodollar has been nice. It's been really expanding to the downside. All right, so we have the hourly chart here, and I mentioned how I extended it out in time, broke down, small little imbalance, and here it retreats back to that, drifts lower, back into the last down close candle here, which is mitigation, trades up into that, another level of distribution, fair value gap in here on this, so some balance by some inefficiency, breaker, which is high, low, higher high, last down close candle, extend that out in time, trades there, sells off. It doesn't just go to the bottom of this after it goes down. It doesn't hit that level here and trade down like support and resistance idea. So again, that's one of the reasons why I don't teach that theory. I don't trust it, and I look for things that would go against that but still get in sync with the market. And what do I mean by that? Everyone that saw price go below this low here, they're thinking, okay, if it goes back up to that low, they're going to sell short. And then it does this, higher, and runs higher. And it creates what many other people will say, oh, it took out those double bottoms that ICT teaches, so now that's the low, and let's go buy it here because it's making a turn. When all it does is go up into that fair value gap here and the bearish breaker that you can see on a 15-minute time frame, then it rolls over and sells off. What I just illustrated is exactly how most other folks that look at leaked content or just rush through my videos on YouTube and they just get a casual understanding and they think, okay, I know how to do this. And they don't have the higher time frame order flow. They don't understand institutional order flow. They have no idea where the market's drawing to. They have no idea how to submit to what these higher time frame charts are calling for. And because of that, they fail. That's why they will only talk about something after the fact. I'm out here on a tight wire with no net, and I have to tell you where it's going to go next, and I have to be consistent. If I'm not consistent, it's obvious, right? If I can't be consistent with calling where the market's going to go, I'm going to fall on my face. And I've been doing this for years now, and you have an archive of it. Folks that saw the old archive and assumed that they were faked or made up to make it look like I was smart after the fact. You've been here now since, January, February this year, and you've walked it with me. Okay, so this content and these concepts are the truth. You still can make an error. I still can make an error. It's important for you to keep your focus on what I'm suggesting on the higher time frame commentary. Keep that frame of mind even when you're doing your back testing. Like for folks that have businesses or schooling they're going through, or have a job and they come home in the evening time or whatever, and the price action's already moved without them. You want to go into your studies knowing that what we've been looking for on the commentaries. That's why it's important. I have people still saying, should I watch the commentaries live or just watch the lessons that come each month and just look at the commentaries that I'm doing, like this one here, look at them at a later time? No, like this is the most important thing. Like of all the things that you should be doing, these are the things that prove theory. It proves it. This is where your proof is, because I'm doing it with you, sitting down in the charts, and I'm explaining why it should be going that direction and to that specific level, not some vague area. Okay, I'm taking to a very specific price level. That blue shaded area down here, yes, it's a range because of an imbalance, but I have that particular level. I like that level right there. But it still doesn't change that premium high of that range is the first objective. Then the consequent encroachment of that range, which isn't really technically shown here, but the midpoint of that range would be consequent encroachment. Then you have this level here, and then the discount low of the imbalance. So there's 4 objectives. While I'm not coming out and saying every specific price range level here, like the high, premium high, consequent encroachment, the actual level I like, which is the blue one here, and the discount low of that range of the imbalance. All 4 of those are potential objectives. The first one is what you need to trust, because it may just go there and that's it. It may not even go down to that level here. And that's why I teach partials. That's why I teach you to take profits. So by incorporating this submission, okay, or trusting the institutional order flow and where I'm calling the higher time frame daily chart, that is the key to how interbank traders look for setups and trust what the algorithm is doing, because the daily chart is calling that order flow on the daily chart. That is giving them the basis to what they should be looking to position in. They're not looking at 1 minute charts, okay? Now, I have taught you, and I'm teaching continuously, lower time frame conditions and setups that would get you into what these higher time frame bias and objectives are. So that way your stops can be smaller, your risk can be reduced. You will always have risk, but by using a lower time frame chart, you can reduce that measure of pips for your stop loss, but don't try to make it microscopic either. It's not necessary. So I'm kind of like teaching tonight on the basis of balancing expectations, your perspective on what it should be every single day. Think about what I'm saying in the daily chart. I'm really harping on it tonight because you're seeing it again. It's just going right to what we've been outlining. But if you ignore that, if you try to go against it, you should not be surprised if your results are lackluster or bad. And it's not because you're trying to use order blocks on lower time frames to try to find buys, and order blocks by themselves are failed logic. No, that's not. That's like saying this umbrella isn't a good idea to have because we're in a hurricane. You follow what I'm saying? That may be an extreme analogy, but you're trying to expect something to do something in an impossible situation. Okay, an umbrella is not going to provide much protection from the rain in a hurricane. It's probably going to be ripped off of its brackets and be torn to shreds, or maybe even throw you down the street with it. It doesn't negate the benefit of having an umbrella in a normal drizzle or normal rain. But in a hurricane, you're asking an umbrella to do something it cannot do. Well, the lower time frame charts entice a lot of you because you see me engage and operate and do a lot of amazing things with them, because I'm working with the present narrative and within the context of these higher time frame order flow. So trying to bend and contort my content and concepts into these lower time frame charts when it is opposed to what I'm suggesting that order flow is on the higher time frame, you are going to be fooled by your own inadequacies, thinking that You're never going to learn this because these things don't work. You're trying to force logic of lower time frame hierarchy that's opposed to higher time frame order flow. In layman's terms, you're trying to make a 1 minute, 5 minute, and 15-minute chart dance to a different tune when the song has really been given to you on the daily chart. So if the daily chart's saying we're going lower, you can't expect to tap dance on these lower time frame charts and be like a crackerjack that just is amazing. Like it's just so easy and just effortlessly. But if you reverse that logic and say, okay, I'm going to submit to lower time frame charts only when I'm trading in sync with the higher time frame order flow, then the veil lifts. You can see it exactly how it really is. And it's empowering. And you don't feel like you're trying to reinvent the wheel, which is a lot of what the young men that come to me want to do. They want to improve on what I've already shown is cast in stone. Like it's there. You can't reinvent my concepts. They are what they are because they are linked to the market themselves. But if you don't have this submission to higher time frame order flow, you're going to miss it. You'll have that once in a while it works, but I just can't find consistency with it because you can't submit to the higher time frame commentary. I mean, think about it. Why we even bother listening to these videos? If you're going to ignore that, that's the most important thing. Like that's the takeaway, except for the lessons themselves that's ingrained in the commentaries when I apply them. But anyway, I just wanted to have a kind of like come to Jesus about this because over the weekend I got several emails from students. Some of them are 2021, some of them are 2018. One guy was from the 2020 group. And the same things that they were saying they were having an issue with was, again, going against what I'm suggesting here. So while there isn't a lot of folks that are emailing me and saying, I can't get this to work because this, I did have a block of people that were across 3 or 4 different enrollment periods. And they were talking like they were all sitting in the same room with one another. They came to the same conclusion. Let's send Michael an email. And it was almost like verbatim, but not obviously like verbatim, but the underlying theme was they were going against what I taught and teach and call in these commentaries. So the easiest fix is for all of you, even if you have never emailed me, but you have felt like this, it won't fit together. Okay, it's like you're trying to put that square peg inside of a triangle space, and it just you can't get it. No matter how you twist it and contort it, it's never getting in there. That's what trading lower time frame charts is going to do for you if you are trading against the commentary order flow that I give you. It really is a matter of just relaxing and trusting it, and also trusting that maybe you don't have set up right now. And maybe there'll be moves that you don't see. It doesn't change the logic. It doesn't change the underlying narrative. It doesn't change the way of doing this and learning from it. Because, again, you cannot realistically expect to be able to trade every single day profitably when you have not yet learned everything you're here to learn. That's unrealistic. You can't. That can't be done, okay? You're still learning. So, you only want to look for one setup. And I give you a very low-hanging fruit objective. If you can get 25 pips net in the beginning while you're developing, get it, make it, go to the sidelines, and don't do anything else. I'm not teaching you just to be a 25 pip trader. What I'm teaching you is look for a setup that is highly profitable, highly probable, repeats a lot throughout the week, and then once you get it, exercise discipline and stay out. Doesn't mean you can't paper trade, or when I say paper, don't even do a demo account trade, but do a demo account trade for your 25 pips. Log that experience. What did you learn from it? What was the adverse feelings that you felt? Did you second guess it? Did it move against you real close to your stop? It didn't hit your stop? How did it feel? Did it run away and never even come close to your stop? What did that feel like? Okay, and you want to log these observations. By doing 25 pips, there's multiple times a week that you can get 25 pips. You can do it in 2 stages too, 2 12.5 pips scalps. Okay, there's lots of ways to skin that cat, but once you get it for that week, you stop trading with your demo, and you trust that there will be a repeating pattern the following week that gives you that 25 pips. By doing this, what this does is it calibrates your expectations to, I don't need to trade every day. I know what I'm looking for, and the pattern will repeat each week. Even if I miss the trading setup for that particular day, I trust before Friday's close, I'll probably have something else to easily reach that 25 pips. And 25 pips, folks, and listen to me, 25 pips consistently can retire you and change your entire family tree. It doesn't feel like it because you see hundreds of pips and thousands of pips, and you see me running up demo accounts because you think that's what you want to do. When I'm telling you, when you first come in here and you're developing, if you have not found consistency, and this is for any group enrollment student, if you have not been consistent yet, this lesson, this lecture tonight, this is for you. This is how you fix it, okay? You go back to the basics. You keep your expectations in line with the commentary. Where am I saying it's going to go? You stay with that. You stick with it. You look for one good setup a week, and you try to get 25 pips. And then once you get it, you stop. And you train yourself. And it's going to be hard as hell to not want to get in there and do something else. Because if you get it and you find 25 pips in your demo, that feeling of you won like a video game or a board game, and that sense of victory, and like, I did it. You want to go in and do it again. You want another hit, that dopamine hit. You resist that. And it's going to be hard. Even though it's demo and it's not real money, you need to discipline yourself to say, okay, I have met the minimum criteria for this week's development. Now I'm going to stop. And you can still study price action, but then you go into the following trading week and you look for it again. And when you're consistently able to do that, it doesn't matter if you don't catch 50 to 75 pips. It won't matter because you have a way of finding consistency in a set number of pips, which is so easy. It's so low hanging. Very, very easy to get 25 pips. But being able to get that and trust that every single week you can do that, you won't need a job. Because let's just play devil's advocate for a moment. And I promise then we'll go to the 15-minute chart. Actually, let's just do it now because I know some of you know to think that the video freezes up. But here's a 15-minute time frame for your dollar. I'll touch on it in a minute. But let's assume that you're consistently able to get 25 pips. Okay? But you don't have a lot of money. How do I find a way to make money with 25 pips, Michael? I don't even have enough money to put $1,000 into a trading account with live funds should I ever get to that point. Well, you don't need to do that. If you have $1,000, okay, over time you get with a second job, part-time, selling things around your house, doing services, these are all things I had to do. I wasn't born rich. I didn't have money just falling out of the sky. Say, here, use this, discretionary funds. The financial manna wasn't falling down in my backyard. Okay, that didn't happen. I had to really, really work for it. So when I was blowing out accounts, I had to do this with my own money. You have opportunities now that if you have several $100s, and I don't know the exact figures, and I'm not repping any particular funded service, so I'm just going to use funding services that are available today for less than $1,000. Okay, if you have $1,000 that you save up to and you think that's going to be your bankroll that you're going to build up over time, okay, go back to your consistently finding 25 pips per week. If you apply sound money management to a funded account, let's say you get funded with a $100,000 account, how long would you ever work towards saving up $100,000? You never do it. It'll never happen. So with the same amount of money that you might put with a live account, if you put that with a exam or the staging of getting with a funded account, with a company that you choose, I am never going to say, go with this company. Just like a broker, I'm staying completely unbiased. I'm not leading anyone into any one particular company. No company has reached out to me either. And if they did, I would never partner with them. I would never say, go here. I'm not going to do that. But several of them are out there now. So while I don't have personal experience, I do have students in this mentorship and outside, just in the YouTube level of students, that are showing that they have been funded now. And they're trading with accounts that they know they never would have been able to save up to. And the money that they have the potential of making, they have to split that, obviously, and each company has a different split. But you have the ability to take that measly little 25 pips that you're not impressed with right now. But if you take 25 pips and you run 10% a month on a $100,000 account, that's 10 grand. I'm going to be confident in saying this. There's a large degree of people in this mentorship that are not making $10,000 a week. And I don't care if you have 2 jobs. You're not making $10,000 a month. So if you're making 10% return, which is phenomenal, do not let that figure feel like, oh, that's not successful because you want to double the account every 4 to 8 weeks. No, that's stupid. You want trading to be absolutely boring. And if you have the ability to have funds at your disposal, and there's different ways to do that now, and companies are making it available for people to do this, because like I said, lazy money is always going to exist. It's always going to exist. And people will invest in folks that can do this. So if you don't have a lot of money right now, there's no reason for you to be worrying about that. You need to get your skill sets in order. Get very good at this. And if you never move beyond 25 pips, you won't need to do it. That's enough. That's absolutely enough. And you need to be content with enough. And it may take you 10 years to get to the point where you are a 50 to 75 pip trader. But you won't need to do that to find money, to make money with other people's money. In a funded account, you can build up your own nest egg. Back to the hypothetical example. If you can get funded with a $100,000 account and you make 10% a month using those 25 pips per week, that is so easy. You won't have a lot of the fear. You won't have a lot of the performance anxiety that comes with large leverage. You don't need to use larger leverage. But if you can consistently put down 10% a month with $100,000, and let's just say the split is 60-40. And I don't know exactly off the top of my head, but it may be different, but let's just say it's 60-40. You're getting $6,000 for your efforts each month. I would personally take it out every time you have the opportunity to do so. Take it out. The trick is let it build up. They want you to do that. You might go into a tailspin. You want to get paid. Pay yourself. So if you can do this consistently, make 10%, 10%, 10%, that $6,000 won't be $6,000 your second month if you continuously add that 10% to that funded account balance. So it'll be a little bit more than $6,000. So in 2 months, now you have $12,000. And in the third month, almost $20,000, if not more. You see how fast you can get your own nest egg up? And then you fund yourself like that, and you work your job while you're doing it. Because you're only trying to get 25 pips once a week. Once you get it, you stop. You're disciplined. The people that are seeing you do that, they may be inclined to say, hey, look, why don't you go with a higher tier funded account? Because your performance permits it. And then you pay whatever, registration that you would be required to do. And then you have a higher pool of equity to work with. And then those same 25 pips speak larger, louder. And you're not doing anything more. You're doing the same boring 25 pips that can literally smash every barrier that you have that you think is in front of you. Oh, I wish I could be this, and I wish I could have that. I wish I could be able to afford this. I wish I could do this for my family. You can, but you're holding yourself back with all of these nonsensical, silly little concerns and fears that every trader has, but you won't put it down. You're creating the barriers, and you're holding on to the barriers because you think that you're going to crack something, you're going to fix something, the wheel needs to be reinvented. It doesn't. That does not need to happen. You need to do the same boring crap that every successful, consistent trader has done, which is purge yourself of all these bad habits, this toxic thinking, looking at over here. Why ain't this guy proving this? Why ain't they doing this? Why hasn't he shown this? Why hasn't he been trading this market when it's been doing that? You're worried about everything else except for the very thing that you should be worried about, which is the person in the mirror. 25 pips, folks. It has not changed. I said it over there on YouTube. I am reminding you of it here. Month one easily puts 25 pips a week in your account. Easily. But do you have the skill set to say, I'm done for the week? Chances are, no, you don't. Because greed and fear of missing out on the next big move prevents you. And you rush to get in something that may not be a good setup. It may be iffy. But let's say that you get funded. Okay. And you start doing the 10% a month on a $100,000 account. And you're drawing $6,000 each time you can take funds out. And you're able to do that over the course of, 6 months. You have a nice nest egg then. And that's assuming you're just doing 10% a month. Some of you may be better than that, but you should not rush yourself. You should not elevate yourself to an expectation of Olympic level performance. Trading contests, trading competitions, trying to keep up with me, trying to keep up with someone else. That's stupid. While you're developing, that is distraction. That is a problem. That's toxic thinking. You all that are young in here, that are young men, you want to flex when you have no muscle. You have no muscle, but you want to flex. It takes time to build up to that. And over time, once you've built up your own empire with your own riches and such, and you've done well, and you want to go out there and do that kind of stuff, whatever, it's fun. But right now, that's not important. You need to change the financial trajectory of your life. And it happens with very little effort. And I'm just trying to recalibrate all of you, because some of you lost track of this somehow. And you just got to lower your expectations on yourself. Don't elevate it like it's some Olympic task. It's not. It's still hard. I'm not diminishing that. But you have to obviously keep your focus on the right things. And that's what I try to do with these commentaries. I keep pointing to where you should be focusing. And your tools will speak to you if you're using that direction, that expectation, and when you're looking for the market to deliver and snap towards that long-term higher time frame objective, it makes the concepts a little bit easier to see, spot, and observe real time. And it's very, very rewarding to see it come to fruition when you submit to that. And once you get used to doing it for a couple months, you realize that this isn't as hard as you thought it was. And you don't need it to be a lot to do very well. And you don't need to prove to other people what you're earning. You don't need to do that. Who says you have to do that? Other people? Who are they? They're not going to take money out of your pocket, and they're not going to add more money to your pocket by you showing them what you can do. 25 pips on a funded account. Even if you could trade with your own funds, it might be an experiment on your part just to simply do that. Trade with a funded account. Use that instead of going into your own funds. When you decide to trade with live funds, should you ever decide to do so, at your own discretion, go through the process of using a funded account. Test the waters. It's a lot easier knowing that these accounts, even though they have people investing behind the scenes, you don't have to deal with them on a one-on-one basis, which is altogether something different when you are trading a hedge fund. That's a totally different expectation and forced performance and stress. This way, with a funded account, there's so many advantages to that I can see, even though the split can be looked at as, oh, well, they're getting a lot for your own efforts. Yeah, but these people are putting money in there too that you didn't bring. You could be wrong. You could just be lucky in the beginning. And you don't want luck to be a factor in any of this. 25 pips per week. You're trying to just make 10% a month. Build on that. Just build on it. And over time, when you are allowed to take money out, you take it. Do not leave it in there. Anything can change. This world is changing drastically, very, very quickly. You want to get paid. Get the money in your bank account. You're holding the bag. You can run that account up all you want. If something happens, that funding account says, we're no longer in business. What recourse do you have? I don't know. So just get yourself paid when you're able to get paid, and build up your trading account that you're going to do your own like that. You'll save more using the skill sets you're learning here by going that approach than working jobs and trying to trade up your little minuscule account. And I'm not trying to be disrespectful, because some of you aren't going to have the ability to have $10,000, $20,000 to start trading with. But if you get very, very versed with what I teach you here, you're disciplined, and you're looking for that low-hanging fruit. 25 pips, folks. Even if you got it down to you're just taking 5 pips net, and I wouldn't say do this, but just say that's the way you're going to skin the cat. You just want to get 5 pips. Boom. You get it in one day. One little scalp on a 1 minute chart. Boom. That's it. Gone. And you just got to do it each day. But that demands that your ability is to find that setup that delivers that for you. I don't think you should do that. But in my mind, I argue all the time with my oldest son. I'm like, even if I had next to no time, if I had a job, like if I had school, if I was in college or whatever, I'm confident that my concepts could be reduced down to a 1 minute chart, and I can just do 5 pips a day and be done. Inside of a smoker's break. I don't smoke, but people that go around outside like at 10 o'clock and 2 o'clock in the afternoon, they get their 10-minute smoke break in. I could do that. When they go out and smoke, I'd stand with them and I'd find net 5 pips and I'm done. And that's it. That's my 5 pip break for that particular day. And I don't need to do anything else. Do it 5 times a day. 5 times a week. There's my 25 pips, and there it is. I ain't got to worry about staying up, waiting for any kind of economic news event. 1 minute chart. It's always talking. It's always talking. But when you think about it like that, and then think about how you yourself have been trying to, what am I going to do? What am I going to use as my model? How am I going to make a model out of this stuff? He keeps bringing up all kinds of stuff. And it's like, okay, I haven't even got myself equipped with the things he's already taught me here in this month. Now I got this stuff. How am I supposed to put all this stuff together? Stop worrying. Stop worrying about all that. You need to learn. Get exposed to the content, the concepts, and watch how these things speak to you in your back testing in the direction and in the delivery of price that I give you in these commentaries. That's me lending you my experience. This is not going to go on forever. So you want to use it while I'm doing it. This is a coaching tool. It's a training wheel for you. A year from now, I'm not going to be doing this because it's not needed. All of you will know how to do what I'm doing in these higher time frame charts by yourself. You will be weaned off of this in 2022. You'll be weaned off of it, and in 2023, you will be independent on the higher time frame daily chart. You will know what it's trying to do on that daily chart, and you won't need ICT for that. Okay? By having that, and I apologize if you hear Bella in the background because I won't be editing this out. The idea of trying to keep everything at the minimum work, minimum effort, minimum expectation, and then using money management to maximize that is your objective. And if you can do that with other people's money through a funded account, it releases all of that anxiety. At least it was in my mind when I was thinking about all this. Like, it should release all of the anxiety that you have and the performance anxiety that you're developing that hasn't even been expected of you yet because you haven't even opened up a live account or even found your consistency yet. But it is framed on that simple little 25 pips per week. Now, over time, you're going to find that 25 pips is several times a week. And you might get 2 or 3 of them over the course of a week. Now, what if you become 50 to 75 pips? Then do the math on that. And then what happens when you leave a little piece on and you catch a runner? That adds to all of that as well. So do the math on a $300,000 account. And I know for some of you that doesn't you can't comprehend that because those numbers are just so far out of reach for you right now. But they're available. For people that can do it, it's available. And you hear all these people, oh, well, you're really not trading with that $300,000, or you're really not doing this. Listen, if the company's going to split with you and pay you, does it matter? There's so many arguments that people have against it. To me, it doesn't make any sense. If you have the ability to use your skill and that company is willing to split with you 60-40 or whatever the split is, and I apologize if that's not the accurate splits between payouts when you do them, because I don't have the personal experience in it, and I'm just speaking hypothetically, like if that's the route you go. Whenever you get a chance to pay yourself and settle up each time, you do it. Don't get caught up in the trap that, well, you're going to let it build up, because you could get paralysis when you get to a certain threshold of money. And if you're not used to working with those type of figures, and none of you really are, and that's not being ignorant or demeaning at all. Like, you have no idea what it feels like to be in a trade and you're watching the fluctuations of thousands of dollars coming in and out, in and out. Like, you don't know what that feels like. It's not the same as watching a demo account because you're desensitized to it. You know you're not going to get that money, and you don't care if you're right or wrong. You're just hoping you are so you can show your friends. With something like this, you want to be highly disciplined. You want to be focused in what you're trying to do. Like a business, you want to go in, do your transactions, and get out. Another business week to come. I'm done for this week. And you really look for the highest loaded deal in your technicals, in your market of your choice, and you operate. That's it. Nothing else. And you don't care what anybody else thinks. You don't care how you stack up to somebody else. Who cares? Okay? That doesn't make a difference. But you're adding to your own bottom line by doing this. And you can, over a course of a year, easily put $50,000 to $100,000 in your own hands of your money. Then you can treat that funded account as your slush fund. That's what you live on. And you trade, for retirement purposes, your own funds. You don't take exorbitant risks with it. You don't push it, okay? You just try to double it each year. So if you have an account that you've ran up $100,000 on, this is how you balance it out, folks. Listen to me, okay? Say you use these funded accounts, okay, and you build up $100,000 in your own money. You use that for your own personal trading with the expectation that you're trying to double or triple it a year. That's it. You're not trying to do Olympic feats, okay? And some of you might think that's crazy, but 6% is a very doable thing that doubles it over the course of a year. But then you got taxing, okay? And you may not be in a vehicle that is allowing for deferment for taxes. You can, in the U.S., put it in an account that defers taxes and build it up and not have any taxes taken out. That's a self-directed account. You can continuously do that. So 100,000 in 1 year becomes 200,000 if you're just simply doubling it. We'll just use that. In year 3, it becomes 400,000. Year 4, 800,000. Year 5, 1.6 million. In 5 years, 1.6 million. At the same time you're building that up comfortably without forcing any performance on your part at all. Just doing the minimum, 25 pips, try to let it build up, 6 to 10% a month. Let it grow. 5 years, $1.6 million. Low end if you're consistent with that 6% a month. Think about that, folks. All that is 1.5% per week. All it is 1.5% per week. And you're taking 100,000, turning it into 200,000, then 200,000 to 400,000, 800,000, 1.6 million. What's year 6 going to do for you? Are you in a hurry to get into that money? You shouldn't, because you're using the funded account or funded accounts. Okay? Because if you start managing yourself really well, you could have a funded account with short-term trading and day trades, and then another funded account that you use for index trading. It's just primarily just for that. And one of those accounts is your living expenses. Some of you young men and women in here probably could do very well with $6,000 a month. Let that be a model or a business model or plan for you. It's just merely suggesting it to you. I'm not suggesting that it fits everyone. But if I was a young man in my 20s starting all over again and I had all of these resources available to me, oh man, you have no idea. It's like a candy store out here right now. Like, it really is a candy store. Like, you have so many advantages. I'm so envious of all of you. I'm not going to lie. I am envious of all of you. You have so many advantages that people like me and older did not have. And you have no excuse not to succeed. You have zero excuses. But you have to put the work in and make it fun while you do it. But let the results be boring. That's how you manage all this stuff. From a psychological and emotional stance, you turn into a game and you make it a hobby first. Once you get really good at your hobby of reading these price charts, then you go into consistency hunting, where you want to, okay, I'm able to find this consistently with a demo account, and I don't care what the results are. And once you're consistent for 6 months, once you have that 6-month track record and you're satisfied that you can find this consistently each week, then consider a funded account. It's less than $1,000, and I don't really recall exactly what the numbers are, but there's different thresholds you pay for, like a $50,000 account, a $100,000 account, or whatever they go up to. I don't even know what they go up to. I know one company offers a $300,000 account. But if you're making 10% on that $300,000 account, think about that. Say you net 10% on that. That's 30 grand, folks. $30,000. Some of you don't even make that a year here. And again, I'm not trying to talk down to you. I was there. I did the same stuff. But how many $30,000 months do you need in a year to do really well? You don't need a lot. You can spread it out. And let's say you average $15,000 every month and getting $30,000 or 30% over the course of 8 weeks. Spread it out so that way you're not trying to be an Olympic contender. You don't need to make this harder than it needs to be. Just keep it simple, low-hanging fruit, and that way you have income streams that your effort, not your money, your effort yields that money in return. And then you build up your own finances with that, and you start putting it aside. That way you have a funded account that's in your name, it's your money, and you will always have a place to do business. You won't need a funded account. But my objective would be, if I was 20 years old, I would start with a way of getting funded for like a $100,000 account. And I would try to run that consistently, build it up to that way I can get to a higher threshold, but 300,000 is really good. And then try to do 15 to 20% a month. That's how I personally would do this whole thing all over again. If I was absolutely broke, no money whatsoever, 20-year-old, fresh out of college or whatever, that's how I would do it. And if I was going through college again, this is how I would do it. If you feel like you have to meet your parents' expectations of finishing your degree in uni, I think it's stupid. That's my personal opinion. I'm entitled to it. I don't want any of you to say, well, ICT said I should drop out. I didn't say that. I'm just saying, for me, it was stupid. I didn't get anything from doing all that stuff. I got into debt, and I was never able to take that stuff and go into a job. Didn't happen. So And I think that's the majority of most people in the United States. They pay all this money and they get caught up in that, and it completely paralyzes them because they're stressed out. They have all this debt that you can't write off, you can't do bankruptcy on. You're stuck. It's like a mortgage. You can't escape it. Like at least a mortgage in a home, you can just walk away from that. It hurts your credit, but you can't walk away from student debt. They will follow you. But if you can use this just casual conversation, that's all we're doing here. I'm not telling you this is a blueprint for you, but over the weekend I started thinking to myself, if I had to do this all over again, using what's available right now, how would I do it? And I'm kind of like talking off of what I was thinking this weekend. And I literally believe that some of you in here could use this as your approach. Now, what I believe and what you're capable of doing is obviously two different things. There's a wide chasm there. But many of you that are growing in consistency that can easily get those 25 pips per week, you're probably smiling to yourself thinking, I never really thought about it like this. Like, this is really within reach. And we're not really talking about, wild, exaggerated results. Like, these are really doable things. And it frees you up psychologically and emotionally to not have to work too hard doing this. And then it is really fun to realize that you're not doing that much work to get an enormous payout. And some of you may just say, I'm just going to stay at 25 pips. It's easy to do it. Why should I work harder for it? I have the equity behind me, and the results, of just putting the money in my hands, I ain't got to worry about that. And it may keep you balanced as an analyst, and your consistency stays true. And you're a purist in your results because you're not striving to do much more than that, because it's not necessary. It's not required for you to do much more than that to be successful or profitable. So I pose this as a means of stimulating your goals, stimulating your business plan as a developing student and trader. So that way it gives you trajectory. Where are you aiming for? Because some of you are just thinking, I just got to master this right now and it's going to all work for me. No, you have to learn these things, figure out what your personality lines up with, then find a model that matches that, and then consistently follow it. Even though you may lose, you may have a week where you don't get those 25 pips, but it doesn't blow out your model. It doesn't say, I got to stop doing this. You stick with it. That's all part of the growing in consistency. Trusting the fact that you do it once in a while wrong, or sometimes your model won't be right. It doesn't mean that what you're learning here is flawed. It just means that, hey, it didn't pan out for you. Stay with the logic. Just like the daily chart. When it's in a sell program, just because you have up close candles doesn't mean we've reversed. They're just speed bumps. And that's what you want to keep reminding yourself as you go through the mentorship and you're developing and learning more and more and more. You're going to feel like you're swimming out into deep waters and drowning sometimes because it's so much stuff. But you don't need everything. You need to be familiar with everything so that way you know when to reach for certain tools and concepts. But you're not trying to apply everything to try to make money on every possible thing and trick that I've taught you or make available to you in this mentorship. So now we're back to the analysis, folks. I know I'm probably bored to some of you. 15-minute time frame, euro-dollar. Nice sell side and balance, buy side and efficiency. We have a breaker. Remember I told you I'd mention that when we get down to the 15-minute time frame. That down close candle right there. Big beefy candle, most body, lower close. Boom, trades up into that right here and then back into it once more. So consequent encroachment of the SIBI, bearish breaker, sell off. Sell side liquidity, and then partial will be there, and then you could obviously look to see if it's going to expand down in there for your objective. British pound daily chart, bearish order block. It sold off last 2 days, really nice. Sell side liquidity resting in here. Market maker sell model, watch for that as a delivery. And here you can see a little bit better. This is one market maker sell model I outlined. I said I'd expected when we were trading here on Friday before the weekend commentary. I said that I think it's going to sell off because we have a mitigation block in here. We have the old imbalance, came up into that. low resistance liquidity run signature, and then the sell side resting below here. I said we would likely draw below there. I'd like to see that. And we basically got that. Bearish order block, trade up into that. And then multiple times trading in consolidation, and then expansion down to the liquidity. This sell side now is here. But you can see overall market maker sell model. 15-minute time frame. You can see the buy side liquidity pool here. Relative equal highs. Presses up into that, then breaks down. Breaker. There. Sells off. Liquidity below here. Tags it. All right, so we have homework. This is your homework assignment. I was going to cover the US 100, but I'm going to leave that for tomorrow for homework. Obviously, it'll be 2 days worth of data, and you'll have the benefit of that. But we'll go into the NASDAQ and indices tomorrow for a homework assignment. But for now, I just want to spice it up a little bit and give you something for the crypto guys and gals in here. I want you to look at this fractal on the 50-minute time frame. Try to get your chart to look like this one. Okay, so basically line up this much data on a 50-minute time frame. And I want you to mark up what you see here. Okay, what constitutes this run from here down to here? Okay, what framework is it? And also what is occurring between that point of premium to discount? Okay, and that'll be our assignment for homework tonight. And until I'll talk to you tomorrow in Tuesday's commentary, be safe.